Good afternoon and welcome to the Length of Service Awards Program LoSAP Committee meeting for February 26, 2021. We apologize, we are starting late this afternoon at 12:10. Let me introduce the members that are here today. Myself, Rebecca Bridget, County Administrator. Commissioner Mike Hewitt is to my left. All the way at the far left is Jeanette Cudmore, Chief Finance Officer. Jody Quasme is the Plan Administrator sitting at the admin table. And then to my right is Marianne Murray, the Community Member, and Catherine Pratson, HR Director. Thank you to Michelle Rance, who's at our tech table. She's our admin recorder. And Amy Carter is videographer for today's meeting. So thank you all very much for attending the meeting. In accordance with the Public Health Advisory on Public Gathering Sizes, the St. Mary's County Government LoSAP meetings are accessible by viewing St. Mary's County Government TV 95 and on the St. Mary's County YouTube channel. For those without access to cable television or internet, a listen-only line is available by calling 301-579-7236, access code 963-443. Members of the press may attend. For additional information, please contact Michelle Rance at stmarysmd.com. We'll open our agenda today with approval of the agenda. So if you take a minute to review, and then we'll entertain a motion to approve.
I move we approve the agenda.
We have a motion. Do we have a second?
Second.
Is there any discussion? All in favor?
Aye.
Any opposed? Motion carries. Item 2B is to approve the meeting minutes of December 4th, 2020. If you take a minute to review the minutes, then we'll entertain a motion to approve.
I move we approve the minutes of the December 4th, 2020 meeting.
We have a motion on the floor. Is there a second?
I'll second.
Any discussion? All those in favor?
Aye.
Aye.
Any opposed? Motion carries. Thank you. Item 3 today is a presentation from Marquette Associates with the portfolio update with the quarter ending December 30th, 2020. Presenting today is Pat Wing, Managing Partner from Marquette. So we will turn it over to you. Thank you for joining us this afternoon.
Great. Thank you, Dr. Bridget, and good afternoon again to you all. So you should have a packet in front of you. The stapled deck is the Q4 report. We'll start there, run through it in fairly short order, and just make a couple of quick comments to set the stage for our subsequent meetings. So you can turn to page 2 of that report and focus on the top row where it says total portfolio. You see the market value at the end of the year was about $5.725 million. That's grown closer to $6 million, which I'll show you shortly, given strong markets. But I did want to make note of the returns on this page. You can see as you work your way from left to right there for those various time periods, specifically 3-month, year-to-date, 1 year, certainly strong in an absolute sense, above the actuarial assumed rate of return. But one of the key differences here, if you look at the relative rankings, generally in that bottom quartile or decile. So that's one of the things that we're going to be talking about in just a few short minutes. It seems like maybe a different approach was taken at the inception of the LoSAP. It's much more conservatively invested than the OPEB fund, and during a time where markets have been doing very, very well, having about 60% or in equities and 40% in fixed income is really what's driving those sorts of ranks. It's basically asset allocation because you're using all passive funds across the board, which we very much agree with. To use passive funds when you have a very small asset base, costs are of utmost importance. And related to that, until you get to a bigger size, you can't really access different asset classes or have access to good managers with very low costs on the active side. So we very much agree with the approach. Largely our discussion will be related as to whether this asset allocation is appropriate. In essence, is it going to get you where you need to be, especially considering the funded ratio of the fund, which I think is in the neighborhood of 30%. So just to walk back a second, from a county's perspective, we spent a lot of time talking about the contribution a few minutes ago and how that is driven by the normal cost, the benefits accrued each year, but then you're paying off that unfunded liability. So right now, your contribution far and away is driven by paying off that unfunded liability. So how returns are going to change are going to have much less of an impact on this fund from the county's perspective than, say, the sheriff's fund or the OPEB, without a doubt. So in the back of our mind, I'd certainly argue that you can be more aggressive with this fund than you are right now to help, again, continue to contribute and continue to grow your way into a better funded ratio. So with that in mind, let me pause. That's all I wanted to comment on the report before we shift gears and take just a couple of quick minutes about those items around asset allocation and how we want to move forward.
Questions or comments from the committee?
We have, what, $1 million going in this year? Is that our plan?
Yes.
All right. What number do we need to get this to? Say it's at 5.7, 5.9 now. What do we need to get to get us into better managers with lower fees? 10 million?
Well, the
million?
fees would, if you took more of an active approach or introduced other asset classes, your fees would go up because this is at the lowest cost type portfolio. But to gain access to institutional quality managers and, say, lower cost share classes, probably in the $15 to $20 million range.
Okay.
Anything else? Okay.
So let's continue into the next book, and as I promised, we'll walk through this rather quickly. It's much straightforward, and you can really, the deck is largely structured as our previous meetings, so I'd ask you to just turn to behind Exhibit 4, if you will, where I'll give you an update on the fund allocations, and we can have more of a discussion about the roadmap ahead here. So on page 11 are observations, which I just noted a second ago. We certainly continue to recommend the use of those passive strategies for those reasons. But secondly, again, echoing my comment, let's revisit the asset allocation in June, and I have a slide on that shortly, like I showed you for the OPEB, of the 10-year projection of the policy right now, what that looks like. Before we get there, as I mentioned on page 12, the assets have grown to $5.9 million, so about $175,000 in just 2.5 months or so a decent gain to start the year. And I want to bring your attention to the bottom right chart where you see post-rebalancing allocations. We're not recommending any allocations, but I wanted to bring your attention to your over and underweights. So in that chart, you can see outside the box to the left the respective asset allocations included in the policy. In black, those are the current allocations. Blue are the targets. And then the difference in green, you're overweight, and in red, underweight. So as of last week, about 2 percentage points overweight equities, that largely being sourced from fixed income. That's what we would call immaterial, so we don't have any recommended rebalancing. And related to my earlier comment, you're slightly overweight a higher returning, though more volatile asset class in a portfolio that's positioned extremely conservatively. So we think no rebalancing, or we have no rebalancing recommendation based off of those comments. Now, with that said, if we can just wrap up on page 13, and this is the same sort of analysis I showed a minute ago at our earlier meeting. So that top chart is showing the respective policy allocations, same as the table, just showing the data around it. But then that table below is showing the base case return outlook, which you can see is well south of what we talked about just 15 minutes ago, because you're very conservatively invested. And even now below that actuarial assumed rate of return. So all else equal, say that base case came to fruition, if you're not meeting 6%, your funded ratio will actually decrease over time. Because even though you're making money, it's an actuarial loss. So circling back to my original comments, when we meet again in June, I think it'll be prudent to do another asset allocation study and determine, what's the right mix, largely based on what you have now, but to get us closer to where we need to be. So to continue to contribute to move into a better funded ratio, reduce that unfunded liability, but hopefully have the assets do a little bit of the work for the county as well to get to where you need to be. So that's exactly what we'll do. If you skip ahead just to the next section on next steps. In June, we'll prepare an asset allocation study. It'll be largely similar to what we discussed for the OPEB, so we'll work with Bolton to get those liability and cash flow projections to weave them in and give a couple options for the board to consider. Based off of that, we'll look at the investment policy, review and update it based on any outcomes from those discussions. And then moving forward, to continue to look at custody. And then at the bottom there, you see traditional versus OCIO. It was something that, we were told to take a look at eventually. But as I talked about yesterday's meeting, I think we have a lot of more important work to do before we get there. So if it's okay with the committee, we'd like to put that sort of on the back burner for now, and we'll revisit that at a more appropriate time. So with all that said, let me pause for any questions or comments. That's really all I had prepared today for the LoSAP.
That was quick and dirty. Quick and clean. Well, I did see a recommendation from one of the commissioners that maybe we should forego our $1 million investment this year. And is that right?
Yes.
And so essentially right now, we've over the last couple of years, we've looked at ramping up LoSAP. So the recommendations year over year was 200,000 and then 400 and then 600.
Right.
So last year, the commissioners allocated $1 million.
Right.
So one of the thought processes is if you want to modify that allocation in the Emergency Services Support Fund, last year you did $1 million. And so do you either want to change that to fund emergency services opportunities or support, emergency services support's a better word, and then perhaps use a fund balance? Or if the CARES funding comes in or additional federal funding. So it's to kind of keep that on this kind of margin to see if there's another opportunity for funding.
I guess my thought is now's not the time probably to lower the funding
Right.
into this mechanism.
Right.
Because this LoSAP thing is very volatile right now with all the people getting in, getting out, and some of the emails I read this morning about, people just doing the bare minimum and get their points. So I'm not sure I want to reduce it at all.
Mm-hmm. And so I think from the for the commissioners to consider is really the revenue source.
Right.
And so that's really one of the ideas is right now it comes from that
Options.
the Emergency Services Support Fund, and whether it stays there, what percentages, or if it comes from another source.
Okay, I got you.
So
So it could come from fund balance.
right, exactly.
Was $1 million already invested in FY '21?
Yes, that money was already
That's
sent
what I
over.
thought. So you're talking about for the future.
We're talking about going for,
But we're in the
22.
current budget
Right, I know. I
cycle right now.
can't keep it straight.
3 years,
I
3
can't
years at
either.
all times.
It'll be here before we know it. And the commissioners work with what that number is in terms of trying to increase that funding. And you remember when they did 200
Right.
and then 600.
So
and
we
then,
phased the increase over the years.
right.
But I think what we feel is that we've been doing a good job, or we've been meeting our goals, that's a better term, with OPEB. And SORP seems to, but this one's been the redheaded stepchild, that's not a good term. But this has been like the one that just hasn't kind of had a chance to get up. And we've committed more than we've had in the past.
Sure.
And my sense is that that's a good thing, and we should continue to do that. Now, if we do get some big stimulus money, if we do get 22 million, which is an email I read a couple of days ago, I think this would be an ideal place to pump this thing up and get it up to where we are with the other guys. And, because that's not going to be reoccurring money.
Right.
Correct.
Yeah.
Okay, anyway, go ahead.
No, that's great. I think that wraps up our discussion unless there's anything else. No motions to take on this one. And Michelle, did we do the motion for the portfolio update?
We did.
Okay, great. Thank you. I thought so. Just wanted to make sure. Anything else for Pat? Anything for us?
Did we accept the report for the fourth quarter?
Well, that's what I just asked.
We did do that, didn't we?
There is a motion to approve the portfolio update.
I asked Michelle if we'd already done that. I made a note. Did we,
we do it?
Michelle?
I'm looking.
I don't think so.
Oh, I'm so sorry.
So
No,
Michelle
we
said-
did not.
You made the motion, I'm going to second it.
There you go.
There you go. Thank you. We
thank
have a
you.
motion and a second. Any
Sorry about
discussion?
that.
All in favor?
Aye.
Aye.
Any opposed? Motion carries. Thank you. Sorry, next time I'll just do two, Michelle,
that.
so you don't have to worry about that. I won't ask that. Anything else for Pat? Great, thank you very
Thank you.
much. Much
Thank
appreciated.
you all.
Item number 4 is committee reports. 4A, Plan Administrator's Report for today. Jody?
Thank you, Dr. Bridget. The plan paid administrative expenses since our last meeting, a total of $3,920. $1,000 was paid to Asset Strategies for their fourth quarter 2020 invoice. $2,661 was distributed to RCMD for the annual insurance, and $259 to fiduciary plan consultants. We have future meeting calendar dates of March 25th, April 22nd, June 4th, August 27th, and December 3rd, and these dates have been confirmed. So small correction there.
Great, thank you. Any questions or comments on the Plan Administrator's Report? Motion to accept?
So moved.
We have a second?
I'll second.
We have a motion and a second to approve the Plan Administrator's Report. Any discussion? Hearing none, all in favor?
Aye.
Any opposed? Motion carries. Thank you very much. Item 5 is new business with a certificate of appreciation to Mary Ann Murray, who's our volunteer community member. Thank you very much. You received a certificate of appreciation from the commissioners in January, and since we're in a virtual environment, I'll present it to you here.
Thank you.
It's your certificate of appreciation for length of service award program participant. Your diligence, dedication, and relentless pursuit of excellence has earned the community's gratitude, respect, and admiration. We thank you for your commitment to the betterment of St. Mary's County and its citizens, and it's signed by all 5 commissioners. Thank you. You're welcome. And that wraps up our meeting for today. If all we need is a motion to adjourn.
So moved.
Do we have a second?
I'll second.
All in favor?
Aye.
Aye.
Any opposed? Motion carries. Thank you all very much. Have a nice weekend.
Thank you.